Now, the business cycle, remember I said, well, the business cycle is bottoming and not peaking. I know there's a lot of noise about recession. A lot of that was priced in back in 2022 from the forward-looking indicators. What we've got is the cyclical elements of the economy, car sales and stuff that are slow, miners and stuff that are driven by the business cycle. The business cycle is still chopping. Now, people say, yeah, but look, it rolled down. Yes, it did roll down. It happens at every low of every cycle. You tend to have this correction. And that's where we are now. So you can see the last 2 decades worth, you get this secondary dip before you get the recovery. So that's where I think we are now. It's kind of noise because most of the markets I concentrate on, crypto and technology, are priced off liquidity conditions and financial conditions.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Raoul Pal's urgent update on the latest market crash that has wiped out billions of dollars. There's proverbial blood in the streets. What's caused this sell-off and what's next?
We are at the relatively slow point of the economy where rate cuts are now kind of preordained, and the things that back it up are things like unemployment. I've been talking for a while that unemployment should rise. I don't think it's going to go super crazy, but now we're at the point where we're beyond the unemployment rate of the most negative Fed member. So obviously the signal is there to cut rates, and the Fed have made that clear. Maybe they come sooner, maybe they don't, maybe they inject liquidity in different ways. But either way, unemployment has been rising, and that is a key factor for the Fed, and inflation has been falling, which is the key factor for the Fed. So it's green lights all round to cut rates, and cut rates allows liquidity to come in to the system. So what happened is this mix of the DXY, which is the dollar, and the 10-year bond yields, and Fed rate cuts all came from the Fed starting to suddenly say, well, the market's starting to realize the Fed were going to change course, and then the Fed changing course by saying they were probably going to cut at the next meeting. And that set this whole thing off. Now, there's a lot of rate cuts priced in. They weren't priced in before, but I think they're more correct in how they're pricing things in. Will it work exactly how the markets are suggesting? I don't know, but I think rates come down to 2.5% or lower in this cycle. If you remember, the everything code needs low rates because you have to refi the $10 trillion of debt. So you need low rates to do that and liquidity to pay the interest payments on the prior cycle's debt, which is why the everything code is so important in this and why we keep repeating the same old cycle. It's because it's about paying the refinancing costs of the debt, and we're deep into the refi cycle. So I've been explaining for a while, the Fed and all the central banks need low rates. The Treasury needs liquidity within which to roll that and also to monetize the previous interest payments. That monetization of interest payments is what drives the liquidity cycle and the debasement cycle, which drives up assets. Also, as the business cycle bottoms, people have more money, businesses have more money, it gets reinvested, people invest more, and that builds on a cycle. Things like emerging markets do well when the dollar weakens, so therefore profits get reinvested in the system, and the virtuous cycle of macro summer and macro fall play out, and that should play out all the way into the end of 2025. Okay.
Buying a strategic reserve of Bitcoin would be another Louisiana purchase moment for the United States, according to Michael Saylor, the outspoken co-founder of business intelligence company MicroStrategy, speaking August 6 on TNBC. Saylor, whose company MicroStrategy owns approximately $8 billion worth of BTC, enthusiastically endorsed Wyoming Senator Cynthia Lummis' proposed Bitcoin Act, which would compel the U.S. Treasury to gradually accumulate 1 million BTC, or almost 5% of the total supply of the cryptocurrency. Thomas Jefferson purchased the Louisiana Territory for $15 million in 1803 and nearly doubled the size of the United States, Saylor said. Bitcoin is scarce, desirable digital property. It's a great idea to trade a little bit of currency or paper for someplace that billions of people are gonna want to be in 100 years. Saylor is famously bullish on BTC and forecasted that the cryptocurrency's price would reach approximately $13 million per coin by 2045 during a mega bullish keynote speech on July 26 at the Bitcoin 2024 conference. Saylor told CNBC that Bitcoin 2024 was very catalytic and marked an inflection point for Bitcoin, noting that the conference attracted U.S. presidential candidates, governors, senators, and House members who came out in support of the digital asset. Now it's possible to discuss nation-states holding Bitcoin on the balance sheet. And if nation-states are going to buy it, then it's reasonable for institutions, corporations, and individuals to buy it as well, Saylor said. He has urged investors to become triple maxi BTC bulls, pouring all available resources into BTC buying with the goal of obtaining a 9-figure net worth in the coming decades. Saylor's comments come one day after the entire crypto market saw a $510 billion drop in total market capitalization during a recent market crash. Bitcoin's price declined approximately 18%, but has partly recovered. Long-term oriented investors have been notably resilient, with BlackRock's shares Bitcoin Trust seeing zero net outflows on August 5 despite the market turbulence.
So let's talk about the banana zone, because everybody cares about banana zone. All of our hopes and dreams are in it. And I don't want the stupid fucking, well, you promised bananas. I've never promised bananas immediately. I've told you this is how it plays out. This is a period of time. I've also talked about the boring zone. So you've seen this chart before, but now we've just added the percentage corrections in the boring zone to make it even more clear to you guys how this works. So boring zone 2012, 27%. Boring zone 2016, 38%. Boring zone 2020, 20%. Boring zone 2024, 27%. Right, so it's smack in exactly what you'd expect. And what comes next is the banana zone. And I don't want you guys to miss it because you're getting caught up in short-term time horizons of traders on Twitter. That's their time horizon. Nothing wrong with being a trader. I just don't think you'll make as much money. So I think you're better off to think of the long-term gain is how do I use these kind of opportunities to put as much money in as possible so I can capture the big upside when it comes. And I've shown you why that's not just a hunch based on these charts, it's actually based on the everything cycle. And that this macro spasm is actually the opportunity to really think about this, how you want to get involved, where you can find money to add, how you can get your portfolio set. It applies to tech stocks, it applies to equities overall, it applies to emerging markets. All of these things are setting up perfectly, even to commodity manufacturers, mining companies, any of these things. Car companies, all of the cyclical plays, they're all driven by this. So this is the opportunity that you've been asking for. This is the last chance to be able to do all of this. So I look at these with glee and say, thank you. All I need to do is find some money to put in because I'm max allocated, but I do have an income. So, I try and scrape my bank account for any excess that I've got that I won't need over the next few months and stick them into markets. I mean, I don't sell anything in crypto. I've not sold anything, meaning my overall portfolio at all since 2020. And I just continue to compound and add, and that's worked for me really, really well.
Bitcoin permanent holder addresses have accumulated nearly $23 billion of the asset over the past month, according to on-chain data. In a post on X on August 7, CryptoCoin founder and CEO Kayum Ju exclaimed, "I'm pretty sure something is happening behind the scenes." The comment came in reference to a recent spike in 30-day demand change for permanent Bitcoin holders. Around $22.8 billion worth, or 404,448 BTC, have moved to permanent holder addresses over the past 30 days. And it's clearly accumulation, said Kai. The accumulation appears to have increased since the market slump on August 5, which sent BTC prices crashing to $49,800. The asset has recovered 14% since then to reclaim $57,000 on August 6. Moreover, the Bitcoin Fear and Greed Index has moved out of extreme fear to a level of 29. which still represents fear, indicating a slight improvement in sentiment. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Zella for daily news all for free. That's all for today's video. Until next time. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.